is very much so. All right, I'm going to get started right now. Again, my name is Dave. I'm with the Compass Options System and Compass Options Trade Room and the alert service. So we'll get started right now. So again, welcome everybody, and thank you so much for taking time out on a Saturday to come and listen to the webinar. So this is just kind of talk about the SPY super system. I'll get into that a little bit later. But first thing I need to do, of course, is do the disclaimer. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. All right. By the way, if you have any questions along the way, I'm going to try to answer all I can. But we also have Rory standing by in the office down there. If it's something I can't answer or outside of that, or you do it later, you have to leave, you can put your name and number in the chat box or your Skype username, and he'll call you one time to answer any questions that you might have. All right, and I'll show this again at the end of the presentation, so in case you can't remember that. All right, so this just some graphics of the Compass system. We'll talk about the Compass system. The Compass system is a piece of software I have that runs on Thinkorswim, and I'll explain to you why it's so important, because it does track institutional money, and whether institutions are in a trade or not in a trade is probably the biggest thing that makes a difference as to whether you're going to be able to be profitable in a particular trade. All right, and this is just kind of a graphic of the alert service, what it looks like. It comes on your phone. I send the alerts out on the high probability trades. Anybody on the alert service gets them within about 15 to 30 seconds or so, and I'll go into the details of what goes into that alert that you can follow to take trades. All right, the first thing and I always cover this in any webinar I do, the first thing I want to talk about is what drives the market. There's a lot of times there's misunderstandings of what drives the market. This is just a graphic representation of these little marbles are you and I. These are the retail traders. We're retail traders. There's millions of them around the world, and it's important to understand that we as retail traders cannot move the market. We can't move price. We can't create trends. All we can do is trade. And if the institutions are in there, we can do fine. But if the institutions, which is this big marble back here, if they're not in any trades, if they're not in the trade, and we're the retail traders are in there only, what you get is a lot of chop and chaos in the market. It's just a mess. It's just very difficult to make any money when you're just trading against retail traders. Now, when the institutions get into the trade, things have changed completely. And the institutions, when I say institutions, we're talking about big investment banks, JP Morgan, Goldman Sachs, Morgan Stanley, I'm sure you've heard all the big, huge investment banks. And all these investment banks have traders, trade desks, investment desks, and they also have algos, computer systems. We'll talk about that a little bit. Now, the institutions are also made up of hedge funds. There's hundreds and hundreds of hedge funds with billions and billions of dollars. These people can move the market. Also mutual funds, T. Rowe Price, Vanguard. These folks have billions of dollars. They can move the market. And you add on top of that things like pension funds, large pension funds. Those are all part of what would be considered institutions. And when the institutions, especially in groups, are looking to move a stock up or down, when they're in the trade, this is what moves the market. And our job as retail traders is to basically follow what the institutions are doing. If we want to be trading when they're trading, we don't want to be trading when they're not trading. Okay. Now, this I want to show a couple of charts here. What I did was I took some SPY charts from a while back, and I just want to show you just an introduction to regular candles and Heiken-Ashi candles, what the difference is. These are standard regular candles on the SPY. I use different colors than just red and green because I have some criteria that changes the colors for me. But you can see this is what the SPY looks like on regular candles. Here's some more regular candles on the SPY. And these are Heiken-Ashi candles on the SPY. This is the same chart as this one right here, but this is Heiken-Ashi. And as we'll go into this, you can see how easier it is to see what the trend looks like when you're looking at Heiken-Ashi candles. There's some more Heiken-Ashi candles right here. This obviously was bullish, this was bearish, but you can see how smooth these are. And you can see the trends much easier. So we'll go over that when we get into the Heiken-Ashi section. All right, so in the room, and this obviously applies to the alert service as well, I have a couple of trades, rules that we trade by. First one is we trade the best and skip the rest. This is basically, we're only looking for high probability trades. We're skipping everything that is not a high probability trade. So it's easy to say, it's a little bit more complicated to actually make that determination. And the other one is what I had spoken about a little earlier. Our objective in both the room and the alert service, our objective is not to make trades. Our objective is to make money. And we do that by trading the best trades. We don't need to be in a trade all the time. A lot of traders think like they've got to be, if I'm sitting here at my computer and I'm a trader, I need to be in a trade. A lot of times not taking a trade is your best result. That's the best thing you can do. All right, and as profitable traders, retail traders, we need an edge over other retail traders because that's who we're trading against. So our edges is four things here. We have what's called the Compass system, which I'll go over you. It's a piece of software that identifies when institutions are in trades and when they're not. And then we trade what's called relative strength and relative weakness. So when we take a stock long, it needs to be relatively strong versus the SPY, the S&P 500. So if your S&P or your SPY chart, it's moving sideways and down, and you've got a stock that's moving up candle after candle, then you have relative strength, and vice versa on the short side. If you take these two things, if the Compass system is telling you that you've got institutions in the trade and the stock you're trading has got relative strength, you've just given you a massive edge over other traders because we've got information here that they don't have. A lot of traders don't understand how important relative strength and relative weakness is. It's extremely important. If you're in a trade with relative strength and the market reverses on you, your stock that's got relative strength is not going to fall as fast as the market's falling. That's going to give you some ability to get out of the trade without taking a big loss. We also want to trade with the market trend if there is one. A lot of days, Friday was really a choppy day. Thursday was a choppy day. But if the market has a trend, then we want to be trading in that direction. If not, we just focus on whether the institutions are in the trade. And the fourth thing is we buy near support and sell near resistance. In other words, don't chase trades when they're moving up really fast and moving down real fast. Wait for them to be at a nearer support or resistance level and look to enter there. Okay, so that's that. Now this is the Compass system. This is just a graphic of it. I run the Compass system, which is a piece of software. I run it on Thinkorswim. It also runs on Ninjas, but the displays I'll do today will be on Thinkorswim. And this is basically just what it looks like. And I'll go over these the Compass system and the indicators. But the Compass system itself, it identifies the highest probability trade setups while sidestepping the setups that look good, but will fail more often than succeed. And this is really important. The Compass system does this by identifying when the institutions are driving the move and when they're not. This is what we want to know. This is really important. And the Compass system, what it does is it analyzes complex trading data and displays the results in an easily identifiable visual format. So even a person who's a new trader, when you see the Compass system display, you'll be able to tell really quickly whether it's a bullish trade, a bearish trade, or a trade that's neutral. And that's really important because for somebody who's a new trader, it's hard. It takes a long time to become a good technical analyst to understand the charts. All right, so this gets us an edge over the retail traders. And we basically are only taking trades that are being driven by institutions. If the Compass system doesn't tell me the institutions are in the trade, I'm not going to take it. We're going to trade stocks that have relative strength and relative weakness, as I've said, versus the SPYs or the Qs. This is not RSI, by the way. That's not RSI, which is relative strength index. It's got nothing to do with that. RSI, as far as I'm concerned, is fairly useless as far as trading is concerned. And then we're going to trade in the direction of the overall market trend if there is one. How does it give us an edge? Well, it gives us an edge because our trades are going to be supported by institutional buying and selling. If we're in a trade and we know the institutions are in there, what's the likelihood it's going to go in the direction we took it? Much higher. It's going to be outperforming the SPY, and the stock's going to be moving in the direction of overall markets. So this is a big edge with all of these elements right here. This gives us a big edge over other retail traders who we're trading against. We're not trading against institutions. We're not going to take money from institutions. We're going to take money from other retail traders. All right. What I want to do is I'm going to look at recent price action because I want to show you the Compass system kind of in action here. So let me bring up the Compass system and pop this out of the way. This is the Compass system. This is the S&P/Y on the SPY on a daily basis. This is a daily chart of the S&P 500. This is the Compass system. These are our major indicators right here, and they're either green or blue for bullish, red or yellow for bearish. And the two key indicators I use is this one right here. This is the what's called the multi-time frame momentum, and this is the current time frame momentum. So these are showing what the institutions are doing on a multi-time frame and current time frame as far as momentum is concerned. This one here is the long-term trend, and this one down here is a derivation of money flow. So the more green or blue you have, the more bullish it is. The more red or yellow you have, the more bearish it is. So we've had some fairly bullish moves here. You can see when we went from red to blue here, and the market started up. It moved up pretty nicely during this particular time frame. And the Compass system also has a few other things in here. It has a pop out of the box signals. These tell us when you're breaking out of compression to the upside here, to the downside here. It also has a shaded area that comes and goes. That's a dynamic compression zone. So again, we know when we're in compression when we break out. But the reason I want to show you this right now is I want to go back and look to when the market turned up back in November. When the market turned up in November of 2023, it was right here. We were coming down pretty hard. You notice all the red across the board here. And notice when we finally got green on the current time frame and multi-time frame momentum right here. This is where we started chopping around. Once we got green, that you notice how long we say trend. The only thing that was red was the long-term trend because we had been such a downtrend for such a long while. But once these turn green, you can see that you can stay long the market on the daily basis. So for swing trading, this was beautiful because you had the market in your favor. The institutions were buying the S&P 500 across the board here, and that started way back toward the end of November, and it kept on going. This is a long period of time before it started turning yellow. You're back out to 1st of January. So all through December, we had a really nice move up in the market. And if you were just looking at swing trading, you could just look at the Compass system and know for sure that the market was bullish at the time. Stayed bullish up until here. Now we started getting shifts. So the Compass system is telling us now that the institutions are getting more neutral here. We don't have the big bullishness we had before. Turned yellow, you don't want to really be in the trades anymore. And this is not a time to be swing trading. Still day trade, but you can't swing trade. Back in as we went into end of January, it turned green again, and this became viable. We did run into a little yellow here, but then it turned green again. So this period of time in here with multi-time frame momentum and current time frame momentum staying green. So the whole point of this is to show you what the Compass system can tell you on a daily basis as far as how the market is, whether it's bullish, bearish, or neutral. And you can see it stayed bullish all through February and March, and then we started getting a lot of red. And this was a time you didn't want to be long the market. You wanted to be out right here. And you see this turned yellow and this turned red. This was a time you could have been short because you were red and yellow across most of the indicators, and the market came down. And then we started getting green again. You see a lot of chop in here. You see all this chop, different colors. And then we're green again here now. So now we're bullish again on the market. Pull back a little bit on Friday, but still bullish on the market. So the only reason I showed you that is I wanted to show you what the Compass system can show you on basically a daily basis for overall market conditions. All right, so that's what we did now. All right, so that's I'm going to go more into detail on that, but that shows you how I can identify whether the market is long or short for setup or neutral. So this is what's called the basic high probability trade setup funnel. Now this is what the criteria that I use in the room, that all of our traders use to find the very best high probability trades. And I'm talking about whether it's intraday trade or a swing trade, short-term swing trades. First thing we look at is make sure the daily chart and the 5-minute chart are aligned. So if you're going to go long a stock with options, you want to make sure that the daily chart is bullish. In other words, I never take stocks long if the daily chart's not bullish. So that's really important. The second thing is we want to trade with the trend, both the stock and the market. If the market is trending up, as bullish as it is now, we want to lean to the bullish side. And we would like to have a stock that's also bullish at the same time. Third thing, and this is most important, we want the compass indicators to align. So when I take a trade, I want the compass indicators to show me that if I'm going long, I want to know that the institutions are buying. If I'm going short, I want to know that they're selling. We also trade off a relative strength and relative weakness, as I mentioned. So that's another key criteria. And then we want to enter near support or resistance, support for a long, resistance for a short. And so basically, this is a funnel. If you take a trade that you want to take, that you're thinking of taking, and you make sure that how many of these criteria does it match. If it matches them all, it kind of drops out the bottom and becomes one of your prospects. If it fails this here, or this here, or this here, you don't really want to be in it right then. Now, relative weakness and relative strength will come and go during the day, so you can have these other ones match up, and then if the relative strength comes back into the stock, then you can get into it. But this is how we do. We've tried to find the highest probability trade setups. It's a list of criteria, and we only trade stocks that meet these. And again, this is just in writing what the funnel method is for the highest probability trade setups. But the two in green are the important ones. The stock should have a daily and 5-minute chart aligned, and the compass indicators must align in the direction of the trade. These are important. There are other things we talked about here. When you're trading intraday, you want to make sure the stock is above the volume weighted average price. I'll show you that. It's called the VWAP. If you want to be above for long and below for shorts. And have patience. And this is the most important thing, is to have patience. And so that's how we find these. That's how we find these trades. Now, within the room and with the alert service, these are the main strategies that we use. We do a lot of straight calls and puts, obviously. That's the bread and butter. I mean, this is most of our trades are going to be in here, but not all, maybe 65%. We also use debit spreads using weekly options expiration. And I have videos on all of these strategies, by the way. Debit spreads using weekly option expiration. Then I use what's called time spreads, or a calendar spread over earning. This is the only trade I take over earnings, the only methodology I use over earnings. It's a non-directional trade. I don't care whether the stock moves up or down off the earnings. It doesn't matter to me. And we're capturing volatility crush when we do a trade on earnings. And again, I have a video on that. I've done several videos on this, and it's not really active right now because don't have any earnings coming up for the most part. But earnings season starts the second week in July, so we'll be doing a lot of those then. Then I have another strategy called the weekly at the money strategy, ATM being automatic teller machine. This is a strategy where we capture premium week after week by selling puts against a stock that is neutral to bullish, and we have the longer term dated put out in time, like 2 months out, to protect us. It's at a lower strike. It protects us, and we just keep selling puts against that week after week after week. And if the stock turns around and heads down, then we get protected by a long put. And then we also do credit spreads to capture premium. We do these over a few weeks. And I have something else called the SPY Super System, and these are for very high probability trades. These are intraday trades. These are short-term trades. I trade the SPYs or the Qs when everything lines up the way we want it to. We'll take them, and it might only be for 3 or 4 candles. So this is the strategy that I only call out in the room. I don't actually send out alerts on this particular strategy. All right. So let's talk. I'm going to first talk about the alert service. The alert service, it's designed for day trades and short-term swing trades. This is not for investing. This is for folks who want to be intraday trading or short-term swing. Short-term swing trades are overnight to maybe as much as 2 to 3 weeks, but generally overnight to at least a few days. So that would be who this is for. It's also designed for traders who can't watch the market all the time or don't want to watch the market all the time. We send the alerts out, and you can just trade off the alerts. And again, you're going to get real-time alerts. You're going to get them on the highest probability trade setups. Only high probability trade setups are going to be alerted or even called out in the room, and that's what you'll get. So some days there might be no trades. Some days it might be 2. You may go 2 or 3 days without a trade because there isn't any high probability trade setups. But generally speaking, probably on a monthly basis, I would guess somewhere in the neighborhood of 20 to 25 trades, sometimes a little bit more than that, sometimes a little bit less, but that would be the pretty close to the number that you can expect. And And again, we find these highest probability trades by identifying institutional involvement. As I've said, that's really important. We look at market internals to let us know if there's more stocks going up and going down, and then we do technical analysis on the individual stocks to come up with the very best. So that's what the alert service will do for you. This is just a P&L of, I think this was actually last quarter last year, so I need to update this, but this just kind of shows what the P&L looks like. It's kind of one you want that goes to the bottom left or the upper right, and that's over for 90 days. Now, what I'm going to do here is I'm going to go over some of the trades we've taken for the last few months. I'm not going to go over every one, but why I'm showing this is because I want traders to understand that when you're trading to be consistently profitable, if you hear about things that they can tell you they're going to get 400%, 500%, 600%, 1,000% a trade like it can be done regularly, it can't. That's not possible to be a consistently profitable trading like that. This is typically what you're going to see as I go over these. You're going to see that our results are as low as 5%, as high as 100%, but that's the range that all the trades are going to fall into as far as profitability is concerned. This is what you're going to see. This was September of 2023. In the room and on the alerts, we had 25 wins and 2 losses, a 92% win rate. And I use a criteria here of $2,000 invested in a trade. This is just a number I use to make a comparison, so I can look month to month to see how the trades we called out are doing. Obviously, you don't have to do 1,000 or 2,000. You can do 1,000. You can do 500. Some people do 10,000, and it doesn't have to be the same every trade, obviously. But this is what I use for a comparison when I'm actually producing a baseline. I need some sort of a baseline. And you see, we do have losses here. We had a couple of big losses in September. Amazon, this was a news event that killed our options. But you can see basically the win rate's pretty high, and you can see what you're going to see: 25, 30, 35, 40% from trade to trade. All right, so that was September. This is October. Again, you can see the wins, see a few losses, see the wins in there. Again, 20, 30, 40% is fairly consistent with these, and they just keep up month after month. 24 and 4 in October, 86% win rate, 44.80 as far as profitability was concerned. So it was a pretty good month. November, we had 21 trades, 21 wins and 4 losses. Again, notice the consistency of the trades that we take, how consistently the profitability is. It stays within the same range all the time, pretty much. And we had cut 3 or 4 losses here, but nothing too big. And that was netted 51.60 in November. And here's December, very slow month for us. Holidays, Christmas, not a lot of trading going on, not a lot of good opportunities. The market was pretty good, but the trading was not that great. And we had 14 wins and 2 losses, 87.5% win rate, netted 31.15, one of our lower months. And we have had losing months. I've had 2 losing months in the last 2.5 years, 30 months of 28 wins, 28 winning months, 2 losing months. Small losing months, but still losing months. All right, so this again was the December trades. And you can see here we had the McDonald's at 36, Microsoft at 63, took a loss on Oxy, took a loss on EXPE, but still made over 3,000 in the month, which is really what's important. This was January trades. January was really a good month. 20 wins, I didn't list them all, but 20 wins and 2 losses, 90% win rate. You can see the win rate stays fairly consistent here. But again, 43% in Zim, 39% in WDC, 65% in Mara, 96% in BA, that was a good one, 10% in JPM. But that's kind of an overview of the trades in January. February was one of our best months so far. We had 24 wins and 2 losses, again, 92% win rate, but 2,000 invested in each trade, netted 11,745. And a lot of this is because of the market. If the market is trending and you can stay in trades longer, then you can get higher profitability. If the market is choppy and the stock's choppy, you basically got to exit quicker. You have to cut your profits so you don't have as much ability to stay in the trades longer. So that's going to have an impact on the profitability of your trades. Even though you may have the same win rate, the profitability is going to go up and down based on how long you can stay in a trade. And then in February, I broke out the alerted trades. We had 20 wins and 2 losses, 69.30. Again, we take trades in the room. We don't take on the alert service for a couple of reasons. One, if they're going to be fairly quick trades, half an hour, less than an hour, I don't alert on them. And if I take them at the very end, toward the end of the day, like 3:45, I'm not going to alert on them because it's not fair to the alert members to get it that late in the day. They may not see it till after 4 o'clock. But again, that was a 20 and 2 here, and again 69.30 on the profits on February. I kind of stopped doing the monthly ones. I want to just kind of, that gives you enough of, I think, enough of a baseline of what we can produce. This was 2023. This is the overall results using 2,000 per trade. 2,000 a trade, and in the Compass Options room produced a net profit of 60,000 basically. So if you had a $50,000 account, again, this is arbitrary, but I just used 50,000. If you put 2,000 in each trade when you started the year, you'd be using 4% of your account in each trade that you took. Obviously, as the profits go up, if you're using 2,000, the percentage of your account drops down. But the balance grew from 50,000 to 110,000 in the year. At the end of the year, 2,000 per trade was less than 2% of the final account balance. So this is kind of gives you an overview of 2023. This is our first quarter of 2024. Trading room, 65 wins, 11 losses, 86% win rate, a little over 18,000 profits. Alert service, 41 wins, 6 losses, 87% win rate, a little over 12,000 in profits. Again, this is based on $2,000 in each trade that was alerted or was called out in the room. And to talk about the alerts, what you're going to see on the alert service, when you get an alert, every trade is going to obviously include the stock symbol. It's going to include the option strike price. It's going to include the expiration date, and it's going to include the price to pay for the option. And that could be a range. You could say $1 to $1.05. Typically, I send out an alert when we buy the stock, buy the option, and then I'll send a separate one out to exit with a price target for exiting the trade, a profit target. Once we've seen the stock move for the rest of the day or maybe a couple of days, then we'll send out an alert for the sell order. And when you get a sell order on the alert service, I always recommend that you put it out there as good till canceled as opposed to a day trade, good till canceled. So if you're not at your computer in the morning, when the market opens, or anytime during the day, but if that stock trades, if that option trades and turns into profit, you want to have that trade working. So I'll always use GTC on your exits. All right, so, and I did add, this was some trades from May and June I put on here. This was a May alerted trades closed, and these were the alerted trades. This is the room trades. But these were the trades we had, and I was focusing here on time spreads. These are the strategy that we use for earnings, for over earnings, time spreads. So we had quite a few time spreads in here, 1, 2, 3, 4, 5, 8 time spreads. We had 7 wins out of 8 on the time spreads. So we did a lot of time spreads in May because there was a lot of option trades to be used for over earnings. But again, you can see that we had 15-1 on the alerted trades, 27 and 6. We had a lot more trades in the room than on the alert service, but they netted pretty close to the same amount of money. And these are the June trades, pretty much up until the end of the week here. You can see what we've got right now: 15 and 2 in the room, 88%, and so far in the alert service, 7 and 1, 87.5% win rate. 4,400 up so far in the room, and up 3,200 on the June trades. So that just kind of gives you an overview of what we produced in the room. Like I said, we've had 2 losing months out of the last 30 months, so I think that's pretty good. Now I'm going to talk about how we achieve these results, and then I'm going to get into some HeikenAshi candles and how to use those in your trading. So we achieve these results by identifying when institutions are driving a trade and when the market internals are heavily bullish or bearish. And this is what we've been focusing on since the beginning. We want to be in a trade when the institutions are in the trade. We only take trades when both of these are in our favor. Not 100% true. If the institutions are driving a trade and the market internals are neutral, I'll still take the trade. I'll still take the trade if the market internals are neutral, as long as they're not. If I'm going bullish, I don't want the market internals to be bearish, but neutral to bullish, I'll take the trade. So what we're doing is we're aligning our trades with the institutions. Again, we trade the best and we skip the rest. This just talks about institutional money flow. I use some software to find institutional money flow. The Compass system is the major one. This is how we get the success we've had in finding these trades and getting this highest probability run rate. It's very, very high probability win rate that we have. Right, so just talk quickly about how the Compass system, how it identifies when institutions are creating a trend. And we do what's called a triple screen assessment. The software is looking across multiple time frames. Triple screen assessment means you might call it fractal, or you might call it multi-time frame momentum or multi-time frame charts. That's what we look at. So the triple screen assessment is looking across momentum on current time frame and multiple time frames. It's looking at trend across current time frame and multiple time frames, and it's looking across money flow. Across money flow pretty much is current time frame. Right, so those three things. So when you've got the momentum moving up on current time frame and multiple time frames, when I say multiple, if you're looking at a 5-minute chart, it's looking at the 5-minute, the 15-minute, and the 45-minute. So if you've got momentum moving up on the 5-minute, the 15-minute, and the 45-minute, most likely institutions are driving it. When trend is following the same results, 5-minute, 15, 45 is also moving up across those time frames, then the likelihood of an institution's driving this trade is extremely high. In the middle 90s at least, that they're in there driving it. And listen, they don't stay in. Institutions will get into a trade, and they may come in for a while, come out, and then come back in again. But you can always see when you intake a trade, you can see that the institutions are in there, that you're joining them, and that's what we're trying to do. We're trying to pick up their breadcrumbs as they trade. This just kind of shows you a Heiken-Ashi chart before I get into it. This is Tesla. This is a chart on the Compass system. You can see the indicators here. It's a 5-minute chart. Obvious that the institutions are in this trade. We look at the green across the board here. But these are Heiken-Ashi candles on there, and I'm going to go over this in just a second to show you how they work. But this is where we entered it. You see the compression pop out of the box symbol, and these candles right here are Heiken-Ashi candles. And one thing you'll notice about Heiken-Ashi candles that I get into, bullish candles always have flat bottoms. There's no tails on bullish Heiken-Ashi candles. There's wicks, but there's no tails. All right, so this was Tesla. So let's get into Heiken-Ashi candles, the advantages of using them over standard candlesticks. And so these are the main advantages of Heiken-Ashi candles. It identifies confirmation of a trend reversal. If you're trading, and a lot of people trade reversals in trend, they'll look through breakouts, through resistance, etc. You can use Heiken-Ashi candles to confirm the trend reversal as opposed to regular candles. You're going to have a much better likelihood of actually confirming the reversal if you use Heiken-Ashi candles than you will regular candles, and I'll show you why. It allows trade entries on a confirmed reversal, avoiding failed breakouts. This is a key thing. If you enter a trade and you're trying to get into a trade that's breaking out, many times they'll reverse on you. And if you get into the trade after the Heiken-Ashi candles tell you that the reversal has been confirmed, this is going to make a big difference in the trades that you're in. You're not going to be getting into trades as often that fail on you, that turn around and be what would be considered a failed breakout. It smooths out the price movement to eliminate noise. We'll look at that. Allows the trader to stay in a trend longer, avoiding shakeouts. So if you're looking at regular candles and you get little dips and bounces, Heiken-Ashi will take that out of there. So you're not going to be so emotionally caught up in the trade with one little pullback in a 5-minute candle. Will get you out of the trade. You can look at your Heiken-Ashi and see that the trend is still intact, and you can stay in there. And it does identify when the momentum is waning, so that you can get ready to take profits. That's what I do. Is I take Heiken-Ashi to get into a trade and stay in a trade, and when I'm thinking of exiting, I go back to regular candles so I can catch the downturn quickly if I've got profits, so I can protect my profits. And again, it makes it much easier to virtualize the current trend. So these are the major advantages over Heiken-Ashi candles. Right. So if you have not used Heiken-Ashi candles in your technical analysis, you may want to try using them to improve your trade. Yeah, it helped me quite a lot to go to these things. Heiken-Ashi candle, what that Heiken-Ashi means, It means average bar in Japanese. A HeikenAshi candle is created by 2 regular candles to create a HeikenAshi candle. So it smooths out price action again, so the trends can be identified and the reversals can be identified much more clearly. Bullish HeikenAshi candles, we'll look here in a minute. They have flat bottoms, and bearish HeikenAshi candles have flat tops. As long as you've got a bullish trend and the candle's bottoms stay flat, you're still in a bullish uptrend. If you're in a bearish trend and the candle tops stay flat, you're in a downtrend. And so again, bullish trends will have flat bottom HeikenAshi candles one after another, and bearish trades will have flat topped HeikenAshi candles one after another. So as long as they're staying like that, you can typically stay in the trend. Now we'll talk about reversals, and I'm going to show you I'll show you some charts that will introduce this. A reversal in a bullish trend was going to have a flat bottom HeikenAshi candle, followed by a smaller doji HeikenAshi candle. Won't have a flat bottom. It's going to have wicks and tails, followed by a flat top bearish candle. So you go from a flat bottom bullish candle to the doji to a flat top HeikenAshi candle. That's a reversal, and I'll show it to you so you can see what it looks like. Again, the doji candles indicate momentum is slowing, and be prepared to take profits. One thing to be aware of on your HeikenAshi candles, when you have a chart up with HeikenAshi candles on it, the price that's being presented on your chart is not the actual price. It's going to be a few pennies different because HeikenAshi candles calculates them differently. But if you're looking at your trading platform, of course, it's going to show the actual price in there. But just something to be aware of. Okay, let's see. This is kind of an interesting thing. When you're getting a reversal in a HeikenAshi candle, we'll talk about this. If you've got, let's say you've got a bunch of bearish candles coming into a trend, the trend is ending, you've got 4 or 5 HeikenAshi bearish candles coming down. If they're really large, really tall HeikenAshi candles, then when you get a reversal to a green flat bottom candle, you really don't want to do it on a small one. If you got a fairly strong downtrend, you want to make sure that you've got some big HeikenAshi candles that are reversing the trend, not just little ones. We'll show you that a little bit. Okay, so let's get into some of these. This just goes over the other elements of the criteria that we use for trading, but I'm going to skip past this. So this is basically a graphic of HeikenAshi candles, and I'm going to show you some actual charts. But if you look at this chart right here, these are HeikenAshi candles. See the flat top here? This is bearish candle. And then we got wicks and tails, so it's kind of looking like it might reverse, wicks and tails, but then we get another flat topped candle right here. So this is not a reversal of a bearish trend. This is a continuation. So this is a HeikenAshi continuation of the original trend right here. So you're still in the trade, you stay in it bearish, and you can see we're coming down. We've got little wicks and tails, but the tops stay pretty flat. Now, as the bearish trend continues, we start to now get green candles with wicks and tails. Wicks and tails, wicks and tails. Here we have a flat-bottomed green candle, flat-bottomed HeikenAshi candle. This is the reversal of the bearish trend. This is bearish trend. This is where the actual trend reverses based on HeikenAshi, right there. And again, you see you get flat bottom, flat bottom, flat bottom. You see the candlesticks moving up with flat bottoms. This is a bullish trend right here. And this was the key level right there. Now you do notice that the HeikenAshi candles, as they go from 5 minute to 5 minute or day to day, the next candle always starts in the middle of the previous candle because of the way that they're created. Notice the middle of the candle, middle of the candle, middle of the candle, middle of the candle. That's something to be aware of in HeikenAshi candles. And one other comment I'll make on HeikenAshi candles: if you've got a regular 5 minute candle and has a big wick on the top, that tends to be a bearish type movement, because what's happened in the buyers come in, drove the price up, sellers came pouring in and drove it down. So you have a big wick on the top. That's not the case with HeikenAshi candles. That's not what happens. HeikenAshi candles with big wicks are more bullish than HeikenAshi candles without wicks. So a little different. All right, so this was the Tesla HeikenAshi candles right here that we saw. You notice that you got red here. You see wick and a tail, flat bottom, flat bottom, flat bottom, one right after another. Compass systems green, big gives you a big edge here if the institutions are in here. And that's a nice little trade. And this is where you'd be considering getting out of the trade as it switches right here. This was Gilead. This was a Heiken-Ashi reversal right here on the daily chart. This is a daily chart. See, we had a wick and a tail here. We were in a bullish trend already. Then we started getting flat, and now we had a Heiken-Ashi reversal right here with a flat bottom on the daily chart. And GE, same thing. Choppy, choppy, choppy. Wick and a tail, flat bottom, bullish trend has occurred. Compass is still green. And IBM, this is off of my TC2000 charts. I use TC2000 for charting. This was an IBM trade that we took. Notice this, a Heiken-Ashi candle right here. It's got a wick and a tail and wick and a tail, flat bottom, breaking out of a what's called an algo level. Breakout here. This is where we took IBM long. A really nice entry for a trade right here. And Teva, same thing. See the red candles, flat top, bullish, bearish. Here's a reversal right here with a flat bottom, and it moved right up 3 or 4 candles in a row, a bullish reversal. So that's a bullish reversal on Teva. Now I do have some live charts I'm gonna show you. I'm gonna do them on TC2000 because it's easier to see. But I just pulled these up today. This is Amazon from Friday. So this is a live chart. If that's a regular chart on Amazon right there. If I look at a Heiken-Ashi chart, you can notice here, you see how it had a nice bullish trend, reversed, got a little bit bearish, and here we did Friday, we did a Heiken-Ashi reversal. That's a Heiken-Ashi reversal candle right there. We've got a wick and a tail, and then a Heiken-Ashi candle to the upside with a flat bottom. And the colors, this is typically a green candle. I color it blue in my TC2000 to let me know that it's coming out of compression as the Bollinger Bands are expanding. So that's just it's not that important, but it's what I use to identify even stronger Heiken-Ashi reversals, and that's a good one right there. And if you look back, you can see another one here. See the wick and the tail. Here's a Heiken-Ashi reversal right here. It followed through for 1, 2, 3, 4 candles, and then it starts to wane a little bit. You take your profits. And this is a daily chart. Another one I have is I wanted to look at was J&J. On the bullish side, this is J&J. All right. So this is this reversed Friday. There's a Heiken-Ashi reversal right there. Pretty big size candle. If I look to the regular candles on here, here's the regular candles. Things on my chart I have. This is a red line is a 50-day moving average. I'm not going to get into all the details, but I see that it's broken above the 50-day moving average, and it's done it with a Heiken-Ashi reversal candle. A nice long setup right there. So I'll be looking at that on Monday for potential long. Here's one on Merck. Merck also reversed with a Heiken-Ashi reversal right here. That's the Heiken-Ashi chart. There's the regular chart. Nice little breakout here. But the Heiken-Ashi chart gives us more information than the regular candlesticks do. What's another one? Oh, Nike. We got Nike. Here's Nike, another Heiken-Ashi reversal. Big blue candle. Here's we had a Heiken-Ashi reversal right here. As it was compressing, went green here, blue actually, and then flat bottom. See, then you're getting wicks and tails, so you're following this. I may not get out of the trade, but you're watching to see if it's starting to reverse. It didn't, but now you're getting a red candle with a pullback. So there's where you would get out of the trade right there. Disney. Disney has pulled back pretty hard lately. If we look at the regular candlesticks, Disney has pulled back after earnings. You can see it pull back, drop. What I'm looking for to see is when is this downturn gonna reverse? And what I see on Friday is I see a Heiken-Ashi candle. Now, this is not a really big Heiken-Ashi candle. I would want to see some confirmation of this on Monday to let me know that this reversal is actually going to take place. But that's Disney. Now we'll look at a couple of shorts. GPS. This is GPS short right here. To see we had a big move up in GPS here, and then down here to this white line is the 8 exponential moving average that I use. But see this Heiken-Ashi reversal right here on Friday to GPS. So I'd be looking at the regular chart on GPS. I can see that it's breaking down into this gap and becomes a decent short setup if it follows through on Monday. You always need to have confirmation on anything that you take. No one candle is going to tell you everything. But this is ARRY. This is array. That's the regular candles. We look at Heiken-Ashi. There's a HeikenAshi reversal right there. It's been coming down for a while, so it's more like a HeikenAshi. It's a continuation of the downtrend, but we got a nice flat top and a fairly good sized candle on ARRY. PAL, another nice short setup here. It's been short anyway, but it was compressing, and now we got a nice flat top HeikenAshi candle right there to the reversal to the downside. And here's what the chart looks like. You can see where it is. It looks really, really bearish. And just a couple more, and then we'll get back. There's ARES. It's the regular chart, HeikenAshi chart. So I think you can see how you can find these reversals, and by using these candlesticks, it's going to help your trading. There's NetEase here. It's going to help you trading. This is, see here, NetEase had been coming down pretty hard, and you can see nice reversal right here, nice follow through to the downside. And this came down from 103 down to about 89, and then we tried to move up. Did it for a couple candles. Now it's reversing to the downside again, and this is a regular candle on it. So you can see that it's starting to break down. You want to get below this level, but that's the breakdown of that. And it's a HeikenAshi candle that shows you that may be reversing the trend right now. And I wanted to show you a chart, just GOTU, to see what this is. This is a pretty cheap stock, but this was a HeikenAshi reversal right here, off of about $8.13. And look at how nicely these flat top candles just kept coming. One, you know, if you get into this trade for a swing, there's no reason to get out of this, any way to get out of this until you start to at least see some reversals. And see how many flat tops in a row there are here. Now this is where you would likely want them to get out as you start to get this compression. But look at the profits that you had, from $8 down to about $4.76, a massive gain by following those candles. All right, so those are the HeikenAshi candles, and on real trades, that's as of Friday. So I wanted to show you how to use these things to trade. All right, and now what I'm going to do is show some recent examples of trades we've taken in the Compass system, in the room, and on the alert service, and where we get in and where we get out, etc., and why we took the trade. And this was work day. We took this. This was a 5-day trade for 30% profit. This is where we get in right here, as the stock reversed off of here. I actually took it right here. This arrow should be over. I took it when this went blue, and this was blue. Then I had to watch it because I had yellow here, but I still had blue in the current time frame momentum of the daily, and it stayed bullish as far as I was concerned all the way across here. So we stayed in. We stayed in for 5 days for 30%. Again, this is the Compass system. The Compass system we talked briefly about. It's a piece of software you put right on Thinkorswim or in a Ninja, and it'll show you exactly what this will do. It'll show you exactly what the Compass system will show you what the institutions are doing. This was MDT, 25% profit on a swing trade. Get in right here as we went from yellow to blue. Everything else was green. This was my entry. As this little green line is a 15 EMA, it would be considered a support level. Took the trade right here and followed this up for 25% profit. And I'll go through these fairly quickly, but I just want you to see how helpful the Compass system is telling you whether to take a trade or not, because are the institutions in there or are they not? And they obviously were here, and then we just have to pick and choose our entry. McDonald's, we did this overnight trade in McDonald's. We get in for 8:30, out for 11:30 in the morning, $3 profit per contract, 37% gain. You see the Compass system on the daily chart. You see the compression. See the pop out of the box symbol right here, the pink box, pink arrow. You see the compression, dynamic compression zone right here that it creates. It was cut out of that with an arrow. Perfect entry right here. Just took it overnight and made nice profits on McDonald's. Moderna, we can do it short as well. But see, this is a nice breakdown in Moderna. Again, everything went from green to yellow, so everything was bearish here when we get in it, and we took it for 33%. 32% profit in Amazon right here off of everything was green, and we just waited for this compression to break, and then we took it here. We actually were in this for a day trade. We didn't stay in this one overnight. JD, this was another 61% day trade that we took when it broke down during the day. Stayed in it for a 61% profit. Again, you see how everything, see this went from green to yellow. Institutions selling now. We're selling pressure here. It had already been on the multi-time frame. Current time frame went yellow. Dollar Tree, 25% off of this candle right here. Everything's red. You can see the institutions selling this. They sure are. I mean, they're selling the heck out of Dollar Tree. And that's a daily chart. Notice it's red here, and the stock is not moving anything. That tells you that even though the stock's not going down, the institutions are selling it, which means there's likely to be some downside movement pretty soon. This was 21 on DDOG. Again, broke out of dynamic compression, the shaded area. I got it here for a 21% profit. See, everything's red and yellow. CrowdStrike, big move here out of the dynamic compression zone. We had yellow, we had blue and blue, so we had blue across the board. It flashed back and forth, so you have to be, when that happens, you have to be careful. But as long as the current time frame is staying blue, I'm okay with staying in the trade. But we didn't stay in it that long. We took a pretty quick profit in it. Amazon, this was a day 5-minute chart. This was 32% in 45 minutes. Again, you get yellow, green, it went green here. We had green here, so except for the long-term trend, everything was in our favor. And we took it here right on this pop out of the box symbol, right off the 15 EMA, 45-minute trade, 32% off of the compass indicators that we're using. ENPH, this was a 20% in an hour. This is a 5-minute chart. Notice the pop out of the box symbol right here. Below the VWAP, this is the VWAP I was telling you about. It's important when you, and that's only effective on the 5-minute chart, not on the daily chart. The VWAP needs to be, you need to be below the VWAP for shorts, which we were right here as the stock broke out of compression. And we were in it for an hour and took 20%. Verizon, this was a 50% in an hour. Verizon options are pretty inexpensive. We took this for 45 cents, $45 a contract. Into next week's in the money, $45, which is pretty cheap. And we get out an hour later for 67 cents or $67 a contract. So 10 contracts, 450 bucks. We get out for 670 bucks and 670 bucks in 1 hour. That was a nice trade. Now this is a SPY super system that I mentioned that I call out in the room. What we're looking for is we're looking for the compass system to tell us that the institutions are selling this, which they were here. We're looking for a break off of something like a dynamic compression zone, or in this case, the 15 EMA. It was below the VWAP. So this is a short entry right here. We'd take it right here, and this would be a SPY super system, and we would just ride this down and for 4 or 5 candles and then get out, and then it reverse back up again. But you'd never be trading the SPY long off of here because it's below the VWAP, and basically you've got too much red. So you'd only be shorting the SPY in this kind of a setup. And buying puts is what we did. And this Netflix, again, moving down off of the VWAP, pop out of the box symbol to the short side, everything's yellow or red. Take the stock short. We took it here short on a 5-minute chart, 20% gain. Tesla, 30% gain on this. We rode this thing as it went from blue to yellow. Everything was bearish. We took it here and we rode it down. Didn't move it off a lot, but it did fall apart right at the end of the day. And this was an overnight trade we took in Tesla. This is a 5-minute chart. Notice that it's below the VWAP, the pink line. And we've also got a pop out of the box symbol right here. And everything was red and yellow. So we took it overnight with some puts. The stock fell from 120 to 112. The puts exploded, obviously. They're up about $7.50 by the time we get out of the trade. And this one you've seen before. That's the HeikenAshi Candles on Tesla. And this I just want to show you how I use the daily chart and the 5-minute chart together. This was QSR, and this is the daily chart in QSR. And you can see it's all bullish. So I wanted to trade it. But the day that I took it, I wanted to get in at a proper time on the 5-minute chart. So this is the 5-minute chart in QSR. And you see where we went from red to blue here. And the stock was coming along compressional, riding along the 15. This is a pop out of the box symbol. It popped up here. This is where we get in. And this is the 5-minute chart. And it pretty much moved sideways and then started rolling up here. And everything went to green, stayed green. So, I mean, I get in. You have to watch it here to make sure it isn't going to go against you. But it didn't. So that's how we do it. There's a daily chart and there's a 5-minute chart. And that's how I use it in combination. All right. So again, that wraps it up. I'm going to go over the strategies that we use. Again, we use straight calls and puts, debit spreads using weekly options expiration. This is a little unusual for most people. Time spreads, which is a calendar spread. a non-directional trade that's done over earnings. Only when earnings are going to get released that night or in the morning. We take that, the weekly ATM, which is a strategy we use to sell puts week after week against a longer term dated put to give us protection. And we do credit spreads to capture premium over a few weeks, and the SPY super system. This is basically what we do in the room and on the alert service. This is where most of your trades are going to come from. And again, here's what the alert service looks like right here. So I'm going to go over the offers that we have for anybody who's interested in the alert service or the room or the software. The Compass Options alert service, 50% off on this right now, $7.98 for a whole year, $2.96 for a quarter. And again, that comes with a month in my trading room for free. It also comes with a Discord room. We have a Discord room. We have 2 other professional traders in there. Obviously, the text alerts. And my videos, I have about 30 videos on Compass indicators and videos on each strategy that we use and how to use them. I have one on Heiken-Ashi Candles. Everything we talk about it pretty much covers. So this would be on the alert service. And I think by the way, there's links in the chat box. Yeah, there's links in the chat box to all of the specials that we got here. So this is on the option alert service. This is on the live trading room itself. Live trading room is only $11.98 for a year, and the live trading room includes the alert service. So this comes with the alert service for $11.98. You can also try it for a month for $1.48. I don't know that that's really enough time to give it a good test, but $11.98 for the year, which includes the live trading room, it includes the alert service, and everything else. It includes the videos that I have, the 30 videos on trading. It's all in there. And again, this is really a really good trade offer right now for the trading room. If you're interested in the trading room, if you take the alert service, you're not in the room. If you take the room, you're in the alert service. So even if you can only go in the room a couple days a week or something, it's worthwhile, I think, for the difference in price. This is the trading system itself, the Compass system that runs on both Ninja and Thinkorswim. I have it on Thinkorswim on my system. That's what I use when we were looking at. Again, you can get the software for $12.49 for a year. That's about half price. Quarterly for $5.98 if you just want the software. And you get my workspace. It's going to look exactly like my Thinkorswim platform did that we looked at. And it comes with a bunch of trade scanners. We're still improving those, adding some more scanners all the time. Now this right here this is kind of a rarity. This is not something that's done very often, but they've got a buy one, get one free. If you take a year in my trading room, $11.98 for the whole room, they're going to give you the Compass trading system for a year. You don't have to pay for it. You're saving whatever the price on the Compass system was. Again, the workspace is in there. But so if you're in the room, if you're taking the room and for a year, you're going to get the Compass system. You're going to get that software, and the software itself is installed on Thinkorswim or Ninja, either one. But if you put it on your Thinkorswim platform, which you don't have to pay for, by the way, you can just download it. The technicians at Brightline will put it in for you. They'll take over your machine and they'll install the Compass system on your Thinkorswim. It'll look exactly like mine. You don't have to mess around with any technical concerns with the software. They'll take care of that for you. And so as we come up with new scanners and stuff, you would get all of those as well. So that's really a really good deal. And again, so there's your alert service for $7.98, $2.96 for a quarter. There's the actual trading room itself, which is $11.98 for a year, $148 for a month. And again, this comes with the alert service as well. And then you have the Compass trading system, which is a software, which is $12.49 if you just want the software. But I mean, for me, what the no-brainer is right now, if you're interested in the software, is take a year to the room, and notice it's cheaper for the room, and now you get the software with it. So that's why if you're gonna get the software, just take a subscription to the room for a year, and you get the software for free. You're actually saving some money. All right, so those are the offers here. Sarah's saying if you join the trading room for a quarter, does the Compass system with that? No, it has to be a year. It has to be a year Sarah, to get the Compass system. And this is a big giveaway that they're doing here on the Compass system. I mean, they're giving you the software for basically $11.98 for the room and the software all as one price. This is a really huge. I mean, if you're interested in the software, this is a no-brainer, because for $11.98 you get the room and the software. It's a massive savings, and it's not something that I think this is the second time they've ever done this. And again, the software we put on your machine, so it just takes. But you do have to take the annual subscription in the room to get the Compass system for free. You can always buy the Compass system. You can try it for a quarter for $5.98. But you know, this is really a really serious offer right here. This is really a great offer for anybody who's interested in that. All right, so that kind of wraps up the whole presentation. Let's see if we have any other questions. I didn't see a lot of questions out here, so. Nope, don't see any other questions. So that covers it for the day. I appreciate everybody being here at the webinar. I appreciate your time for a Saturday to come. I hope the explanation of how to use HeikenAshi candles, you can use those from any platform. All you have to do is just you select that candlestick type on your platform, and you can look at HeikenAshi candles. So I try to do that in webinars I do. I try to do some information. You know, it doesn't cost anything. Something that can help traders become better traders just by learning HeikenAshi or time spreads or whatever we happen to be doing at that quarter. So again, I appreciate that. Thanks everybody for being in the webinar. I appreciate it very much, and I hope you gain something from it, and hope to see some folks in the alert service and in the room come Monday. Have a great weekend.